So here's a question for you. Is a great company always a great investment? It's one of the most critical questions you can ask in finance. Today, we're going to get to the bottom of it by putting a really fascinating company, Analog Devices, to the ultimate test. Let's dive in. I mean, this is it. This is the big one. It sounds so simple, right? But the answer is what separates the good investors from the truly great ones. Because, and this is key, a fantastic, world class business does not automatically mean it's a fantastic stock to buy today. We're about to find out exactly why. So, to figure this out, we're going to use the gold standard. We're going to borrow the framework from one of the greatest investors ever. We're taking a deep look at a company called Analog Devices, or ADI, and we're going to run it through Buffett's four crucial tests. Is it a great business? Does it have great management? Are the financials solid? And finally, what about the price? Okay, let's kick things off with Act 1. Here, we're going to build the case for why Analog Devices is, by pretty much any measure, a truly wonderful company. We'll start with the business itself. What makes it so special and so tough to compete with? So what in the world does ADI actually do? Well, think of them as the universal translator for all of technology. Their tiny little chips take real-world signals, things like temperature, sound, pressure, light, and they convert them into the ones and zeros that computers can understand. They are the absolutely essential bridge connecting our physical world to the digital one. So, how do they protect this incredible business? Well, they've got what investors call a wide moat. And let me tell you, it is deep. First, they have decades of super specialized engineering know-how that is just incredibly difficult to copy. Second, their customers are basically locked in. See, ADI's chips get designed into things with really long lifespans, like cars or factory robots, so you can't just swap them out. And finally, with a portfolio of over 75,000 different products, they're the go-to one-stop shop. They pretty much own the toll roads of the data economy. And this is what that powerful moat gets you. 70%. That's their average gross margin. That number is just ridiculously high. It screams that they have immense pricing power. Because their chips are so critical and so hard to replace, customers have to pay what they ask. And all that profit, it flows right to ADI's bottom line. All right, so we've established they have an absolutely killer, unbreakable business model. But that's only part of the puzzle for a wonderful company. Now let's look at the other half, its incredible financial strength and the brilliant management team that's steering the ship. A great business can be totally wrecked by bad management, but that is not the case here. ADI's leadership, they're top-notch. They make really smart acquisitions that make the business even stronger. They are constantly rewarding their shareholders, they've raised their dividend for more than 20 years straight, and they're smart about buying back their own stock. They just stick to their knitting and do what they do best. And if you want proof of that great management, look no further. This right here. This is the good stuff. This chart shows free cash flow. That's the actual, cold, hard cash the business generates after all the bills are paid and all the investments are made. Just look at that growth. It's almost doubled in just 5 years. This is the engine that powers everything else. But wait, it gets even better. This chart, this is what really blows my mind. This shows their free cash flow margin. What this means is that for every single dollar in sales that ADI makes, an incredible 35 cents turns directly into pure, spendable cash. That level of efficiency is it's wild. It shows you what a true financial powerhouse this company is. All right, let's just take a breath and recap. We have an unbreakable business with a massive moat. Check. We have brilliant management. Check. And we have financials that are just off the charts. Double check. It passes the first 3 of Buffett's tests with flying colors. So, you're thinking, this is it. Time to buy, right? Well, hold on a second. There's still one last hurdle. And that, my friends, brings us to Act 2, the poor price. This is Buffett's 4th and final rule, and honestly, it's the one that trips up so many people. Because a wonderful company is only a wonderful investment if you buy it at a sensible price. So after all that glowing praise, after hearing about the incredible moat, the amazing management, and the gushing cash flows, you have to be asking this exact question. What on earth could possibly be wrong with Analog Devices? And here's the twist. The problem isn't the company, it's the price tag. When you do the math and run an analysis to figure out what the business is actually worth based on the cash it's going to produce in the future, you get a value somewhere in the neighborhood of $185 to $215 a share. But look at what the market is charging right now, around $230. This leads us to one of the most important ideas in all of investing, the margin of safety. You can think of it as a built-in discount. It's the gap between what a company is truly worth and the price you actually pay for it. It's your buffer, your protection against being wrong. But with ADI right now, there is no discount. In fact, you're paying a premium, which means you have a negative margin of safety. Okay, we've seen the wonderful company and we've seen the poor price. So, what does this all mean for you, the investor? How do you actually use this information? It's time to get to the final verdict. The verdict here is kind of split, and it all depends on where you stand. If you already own shares of ADI, the verdict is to hold. This is a world-class premier asset you want in your portfolio for the long run. Don't sell a wonderful company. But if you're a new investor looking to get in, the advice is to avoid. The price is just too steep to offer a good return from here. Patience is your best friend. You have to wait for a better entry point, which might just come the next time the market gets a little shaky. And it all comes back to this one single idea. A quote that you should probably write down. A wonderful business is not a wonderful investment if you pay too high a price. Analog Devices is the perfect example of a wonderful company. But having the discipline to wait for a wonderful price, well, that's what separates good intentions from great returns. And remembering that difference is one of the most powerful tools you can have.